Welcome to This Week in Money. I'm Jim Goddard. Today, Ross Clark from chartsandmarkets.com tells us we kick off the Canada Day long weekend with a relatively strong loonie. He takes a look at how long that might last and what happened on the major markets. Sprott USA Holdings President and CEO Reaugh tells us what he thinks are the best and worst mining jurisdictions in North America. He believes First Nation interest in buying the Trans Mountain Pipeline is a good thing. One of Canada's top realtors, West Vancouver's Allan Angell, talks about the depressed high-end market in Greater Vancouver. He thinks the BC NDP government's real estate regulations are hurting regular folks the most. Plus, at the end of the show, we'll have a company showcase update from American Manganese President Larry Reaugh. We'll talk to Ross Clark right after this.
Grand Portage Resources' Herbert Gold Project in southeast Alaska highlights increased gold resource, indicated and inferred, of 860,000 ounces, in excess of 10 grams per ton gold. Expansion drilling is planned on the Herbert Gold property for the summer of 2019. Grand Portage Resources trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark from chartsandmarkets.com, where you'll find insightful market commentary and timely technical analysis. Happy Canada Day, Ross.
And the same to you, Jim.
Nothing says Canada Day better than a cross-border shopping trip. Just how is the Canadian dollar doing?
Well, people are going to get a little bit more for their U.S. dollars when they go down in terms of what they're able to buy with their Canadian funds. The 76.35 to close off the week, and this is one of the best weeks that we've seen in Canada in quite a while. You're looking at probably the best level since the first of the year, and Now, it's good to see that the dollar has been rallying with commodities. I mean, that's really what you want to see here. The oil market had a pretty good week, closed off the end of the week with a bit of a sell-off, but overall, trend has been up for oil. Trend has been up for the agricultural commodities, and the Canadian has been participating with that. So, this is all good. However, there's always a however here. When, everybody knows if they've been listening that I'm looking at 10-year cycles as far as the oil market is concerned, and having put in its low at the end of last year, looking for a seasonal low in the June period, May-June period. We've seen that. We've now had a really good move off the bottom. Oil's gone from 50.5 up to 59.5 and closed off the week around 58. This first rally in oil, though, looks as though it's run its course. So looking for a pause here in the uptrend on that one. And not uncoincidentally, the Canadian dollar historically runs in that same 10-year cycle. So ninth year of the decade, you get this rally with oil, as we've seen. And we would expect to see a pause in not only the oil, but also in the Canadian dollar over the next month or so. But then, if it goes with the oil, we think it will, it should have a very good second half of the year. So, corrections in the Canadian dollar, as we go through the month of July into August, will probably be a pretty good buy. And that's one thing that we've written up, and we'll be updating as we move through the summer.
Bitcoin, speaking of a kind of currency, has it reached the point where it really is a currency, or is it still just a sheer speculation item?
Well, I mean, it's being used as a currency, but when you get the volatility that we've had, you've gone from 20,000 down to 3,000, back to 13, all in a span of months rather than in years. This type of action, I can't see that it's ready for prime time as of yet. The volatility is just too much. I know people who've done transactions in Bitcoin, and by the time you establish your price that you're going to pay for something, unless you're literally exchanging the goods and services within the next few hours. There's just too much volatility for most people to be comfortable with, and especially if you're doing it in size.
Gold, has it been making major moves, and will it continue?
Yeah, gold had that great run up until the early part of this week. The price, we got up into the 1440 area, and if you measure the depth of the correction we had during May, June, and you tack that on top of the breakout level, then the 1440, 1445 was a good measured target. And at that point, the relative strength index, our summation index, our exhaustion indices, generated some really good sell signals up there at the 1440 level at the beginning of the week. And that followed what was a record inflow of money into the GLD ETF. So that's the gold ETF itself. Over $1.5 billion worth went in on the 21st of the month, and that's a record high. And anytime we've seen moves like that, I think there's been 5 of them that have been $1 billion or more. We've seen an interim high and a pullback from there. So at this point, the $1,400 level, the round number, is probably a pretty good support. And we've looked at bullion over the years. For this seasonal run, when it has a May-June low and starts to turn, you can get a 5 to 8 week rally into July. We're now just at the end of the 5th week, so there's some more time left in it. However, if gold does break out and takes out the June high at 1440, we've got some really good analysis that we're happy with in terms of what we can be looking for as far as June, or as far as July and August price action is concerned. We've written up a report on that, and if the listeners are interested, they can contact us at chartsandmarkets.com.
Ross, have yourself a great Canada Day.
I plan on doing it with the family and all the grandchildren.
My guest has been Ross Clark from chartsandmarkets.com. Coming up, Rick Reaugh next on This Week in Money.
Always consult your investment professional before making any investment decision.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. We're speaking with Rick Reaugh, President and CEO of Sprott USA Holdings. He's speaking to us from Vancouver. Rick, welcome back to This Week in Money.
Always a pleasure, and a particular pleasure to be speaking to you from Vancouver. Beautiful city.
The Sprott Symposium in Vancouver is just a month away. What's the latest on the symposium, and how can people get involved?
Well, I think that there'll probably be a link associated with this interview for the symposium, but certainly online, Sprott Natural Resources Investment Symposium is prominently displayed. We humbly believe it's the best high net worth retail natural resource investment conference on the planet for a variety of reasons. First of all, the conference has been in place here in Vancouver for almost 30 years. Vancouver is, of course, still the epicenter of mineral exploration on a global basis. The conference has a big following among high net worth investors. In other words, there's a good core of participants, but there's also a great conjunction of great exhibitors and fantastic speakers. People like Nomi Prinz, Daniela D. Martina Booth, of course, Jim Rickards, Doug Casey, who has spoken for us since the beginning, newsletter editors with combined circulations that exceed 1 million readers, serially successful mine builders, the sort of Ross Beatties, David Harquails, Lucas Lundins, Bob Quartermains of the world, and what we see as up-and-coming mining financiers, the folks from Sandstorm, as an example. One important differentiator between this conference and any other conference that you might go to is that we consider our exhibitors, our issuers, to be content, not merely advertisers. At most conferences, the qualification to be an exhibitor is a pulse and a check that cashes, in reverse order of importance. At our conference, an exhibitor has to be owned in a Sprott-managed investment product, meaning that every exhibitor that's there is owned by Sprott. Now, sadly, that doesn't guarantee that every stock will go up, but it does guarantee that they have all been vetted by Sprott. It's important to note that this is a conference that has maintained its attendance and its importance through a 6 or 7 year bear market, which says a lot about the value that this conference gives speakers, exhibitors, and attendees altogether.
Now, with people going to a conference like that, do you get a good sense of what's happening in the mining industry and what the confidence level is?
Maybe less. You don't have much input at this conference from generalist investors, so I wouldn't draw a lot of conclusions about the state of the resource market from this conference, because people at this conference are already resource investors and speculators. What you will get is a much better in-depth education about an area that you are interested in. Certainly this conference, the move in gold from 1250 to 1400, will have people feeling better, more bullish than last year. But that is something that you would expect from a conference which is to the community rather than a conference that would admit a lot of generalist investors, which we won't have.
Does it look like we're finally going to see a gold bull market?
I believe so. I mean, certainly the move from 1250 to 1400 is psychologically important to gold bugs. I don't think it's been noticed by the generalist investors, frankly. But what I do think is that the move from 1250 to 1400 wasn't fueled by the existing gold community. In other words, it wasn't gold bugs renewing their interest. The flow of funds that we saw into gold, I think, came from two different places. One has been sovereign buyers like China and Turkey and Russia, who want a financial asset that isn't simultaneously a U.S. dollar liability. And they also want to have money in a financial instrument that isn't subject to political control by Washington. I think that's important. Gold is fulfilling a traditional role for sovereign investors. I also think that you're seeing smart individual money, the billionaires of the world, the Ray Dalios as an example, understanding that the value proposition put up by the U.S. 10-year Treasury is not as good as the value proposition put up by gold. So what I think you're seeing is a rational flow of funds into gold that presages more generalist investing in the precious metals and precious metals mining business. So I'm less interested in the move, the technical move from 1250 to 1400, than I am the underlying factors that I believe caused the move. And I believe personally those are very bullish. I'm not trying to say that gold is going to take out 2,000 anytime soon or anything like that. What I am saying is that the fundamentals that should be behind gold are behind gold, and that those fundamentals are just beginning to be understood by the generalist investing community, which I think is very good.
Is the U.S. dollar weakening, and is that helping gold move higher?
The U.S. dollar is clearly weakening, and that's very, very important. The U.S. dollar strength, I think, has less to do with the strength of the U.S. economy than it has to do with the weakness of other competitors, China, the European Union. Doug Casey has famously said that the dollar is the prettiest mare at the slaughterhouse. I'm not as dire as that, but I think part of the U.S. dollar strength has been rather than the absolute strength of the U.S. economy, the relative strength of the U.S. economy. And I think that's been part of what's made the dollar strong. And this is a very important point. I think when you look at the relative strength of the U.S. dollar, it's pretty good. But when you look at the absolute strength, some things get called into question. At the federal level in the United States, between on-balance sheet and off-balance sheet liabilities, just at the federal level, not the state and local level or the personal level or the corporate level, we have $120 trillion in liabilities. And we're proposing to service that $120 trillion debt with an income statement that's $1.5 trillion in the red. In other words, we're trying to service it with a $1.5 trillion deficit. I will leave it to your listener to decide how you add a column of negative numbers and come up with a positive sum. Never mind a positive sum that services $120 trillion. It's against that backdrop that we're paying a 2.2% interest rate on the U.S. 10-year Treasury. In other words, the security for the U.S. 10-year Treasury is compromised by $120 trillion in liens, which are serviced by a deficit of $1.5 trillion a year. It's that the gold market is about.
Is a weakening U.S. dollar good for the Canadian dollar?
I don't think so. No. Canada does a couple things well. Sells stuff to the United States and sells oil. A weakening U.S. income statement is not good for Canada. And until Canada politically gets out of the way of its own oil industry, that isn't good for Canada either. So I don't think a weakening U.S. dollar is good for Canada. I would suspect that a strengthening U.S. dollar would be good for Canada.
Silver is known to be more volatile than gold. What do you see ahead for silver?
Well, I agree with that statement. I think that silver traditionally has functioned as the poor man's gold. I think there's been absolutely no speculative interest in gold, which means there's been even less speculative interest in silver. I am a bit of a gold bug, and my suspicion is that gold will run first. But when gold runs, when the fear trade begins, gold runs, my suspicion is that silver will run further because it appeals both to fear and to greed. It's important to note, too, on that note, that silver stocks are rare relative to gold stocks, and high-quality silver stocks that one could buy with a straight face, are rarer yet. Traditionally, the most volatile asset to the upside in a bull market are high-quality silver stocks. So speculators need to pay attention to that before it occurs.
Could we be looking at a summer rally in the gold and silver markets for the juniors?
If you give a good salesman like me the use of the word could, I can make you buy anything. The truth is, I don't know. I think they are rallying off an oversold base. But my own investment horizons, for me, short term is 18 months. So I'm the wrong one to say whether or not we're going to see a summer rally. I suspect that we will see a summer rally in climate-related or weather-related explorers, as an example, like far northern Canada or the Yukon, simply because there's more news flow in the summer than there is in the winter.
BC has just approved a gold-silver mine in the Vanderhoof area that's supposed to supply 400 jobs over at least the next 17 years. Is that finally some good news in the mining industry to actually see a project approved?
It is helpful. It's particularly helpful to see one approved by this government, which maintains power through a coalition with the Greens. I think much more attractive for the mining industry has been the increasing rapprochement and increasing cooperation between Indigenous First Nations communities and the mining business. The fact that there is a growing coalition between the industry and rural populations, but particularly rural Indigenous populations, is, I think, extremely important. And to that I point more to northern and northwestern BC, where the Tahltan, the Shkukumlaksha, the Nishka, the traditional landowners have, through 20 years of experience with the mining industry, begun to develop personal relationships with the industry, interests in the industry, and an understanding of the industry. I think the emerging consensus of interest between the industries and the Aboriginal communities is what's really important to understand in BC and Canadian mining generally.
Isn't mining one of the biggest employers of Aboriginal people?
In rural districts in particular, where there isn't very much other employment, absolutely. You're seeing a real slowdown in the forest products business in British Columbia. Part of it's political, part of it is a function of decreasing feedstock, from beetle kills and stuff like that. So it's important to note that in areas where overall employment, and particularly Aboriginal employment, was associated with the forest industry, it's very useful for those communities to see an uptick in employment from mining.
There are reports that 2 First Nations groups are interested in buying either the expanded pipeline or the entire pipeline complex for the Trans Mountain. Is that good news for the oil industry?
I think it's absolutely spectacular news. Deeper Indigenous participation in the industry on every front. Social participation, meaning that the oil and mining industries would be subject to more local rather than provincial and federal control, I think is a good thing. I think we need more Aboriginal labor force participation, and I think we need more ownership. And I think we need for a lot of reasons. Traditional knowledge isn't merely a sort of a sociological statement. It's a local fact. I would rather be regulated by people who were immediately impacted by the outcome of the decisions than I would be by people who have a sort of a narrative that's set way, way, way far away. Also, importantly, Indigenous people have a social and political standing in environmental issues and political issues among political constituencies on the left, the so-called progressives, that allow Aboriginal communities, in addition to providing financial support and technical support, to also provide political support, which is missing in constituencies that were traditionally available to the mining business. My suspicion is that if you had a coalition of Aboriginal groups, and you're never going to get all of them, but a coalition of Indigenous groups in the producing areas in Alberta, including upstream participation, and First Nations groups in both Alberta and British Columbia that had a financial and management and employment interest in transmission capabilities, that would give you a political and social lift that would put the industry in a position where it couldn't be victimized by Ottawa's sort of elitist narrative. I think it would be critically important.
We'll have more with Rick Reaugh when This Week in Money returns.
I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. We're speaking with Rick Reaugh. Rick, is a weakening U.S. dollar potentially good for trade deals, and the U.S. economy?
I think it gives the U.S. certain near-term competitive advantages. I don't believe that an indirect subsidy, that is, stealing money from savers and spenders through devaluing the dollar to benefit shareholders and business owners, is a good strategy long term. I, for one, believe in stronger rather than weaker currencies. But certainly a weaker currency has the effect of subsidizing your export industries, which means it's popular with workers in those industries. I think it's bad policy, but I can understand the near-term stimulative impact of it.
What's the latest on uranium?
I think we are beginning to see the end of the uranium bear market, not because of the pace of Japanese restarts, which I thought and think are critical, but simply because the new build construction, particularly in China, means that uranium consumption exceeds the pre-Fukushima levels, which means globally we're using more uranium than we were before Fukushima took Japan and Germany out of the uranium consumption sphere. The impact of this increasing demand at the same time that we have price-induced supply cuts means that a change in the uranium market is closer than it has been. That doesn't mean it happens within the year, but it certainly means that it happens within 5 years. And the impact on uranium stocks, uranium share prices in a uranium commodity bull market is something that we've witnessed in the past.
With the theft of intellectual property being a big issue, do you think a U.S.-China trade deal will be done anytime soon?
I'm not a great political analyst, but my suspicion is that the trade dispute benefits both Trump and Xi, meaning that both of them can point to the threat presented by the other to offset criticism of their own domestic failures. I think that's more important in their mind than intellectual theft or economic development. So I suspect that we will continue to have at least political noise surrounding a trade dispute continue, while consumers and producers in both countries try and thwart the will of the people who run those countries and deal with each other. I continue to believe that there will be more noise than there will be actual fury in the trade disputes, but I don't see a lessening of the rhetoric anytime soon, because I think that the dispute offers political advantages to the leaders of both countries.
The Chinese government, being authoritarian, can just tell their people not to buy anything American, but would American people not buy Chinese products because they're more likely to be driven by price than location of where it was made?
I think there is a bit of an anti-Chinese backlash in the United States, but my suspicion is in a freer market, people will pay less attention to what their leaders suggest that they do. So my suspicion is that the Chinese government will be able to better constrain their consumers' purchases than would be the case in the United States.
Are rare earths going to be a concern with China relations falling apart?
Only in the very near term. What you see about rare earths is that they're not particularly rare. The last time we had a rare earth scare, we learned just how unrare they were. The reason that there isn't a lot of rare earths production in the world outside of China is that the Chinese have been so much more efficient at producing it. But to the extent that the Chinese begin to constrain supply and raise the price, what you'll find is that any really old terrains in the world, the Canadian Shield as an example, Brazil, Congo, Russia, Australia, will yield rare earths discoveries. So I think that it's likely that the narrative associated with a rare earths scare could be good for small speculative stocks, ironically many of which have no rare earths. But I don't think that it's anything that technology consumers or technology fabricators have to fear for the longer term.
What are you hearing about China's economy?
I think China's economy is challenged. I think it's challenged for three reasons. Centrally run economies can be more efficient in the near term because their leaders, if they choose correctly, which doesn't happen often, can do so unconstrained politically. China's economy is also challenged because having those decisions made centrally, there's a greater probability of error. There are fewer feedback mechanisms. And we have seen, as a consequence of the politicization and the opaqueness of Chinese banks, that there are big problems in terms of the solvency of some of the Chinese financial institutions. That doesn't mean that they're insolvable problems, but it does mean that there are imbalances that need to be corrected. But probably most importantly, we need to understand that a key reason for China's ascendance in the last 30 years is that they made stuff that Americans want to buy. And to the extent that the American consumer economy begins to be sated, to the extent that trade disputes constrain the importation of Chinese goods, particularly into the American market, and to the extent that the American economy begins to slow down after a 9-year expansion, I'm not saying it will, but to the extent that that happens, China's ability to generate export margin begins to decline at the same time that the chickens come home to roost, those chickens being the misallocation of capital in Chinese banking systems. I'm not one of those who say that China is going to collapse. If you look at the success of the Chinese diaspora outside of China, what you learn is that if you have the courage to make Chinese people a little more free, they become rich very rapidly. And China has the great advantage of having more than 1 billion Chinese people there who will overcome the stupidity of their leadership over time. What I'm trying to say is that the pace of growth that China has enjoyed and some of the advantages that China has enjoyed relative to the rest of the world are not as evident now as they were 3 decades ago.
Will India's economy eventually surpass that of China's?
I don't know the answer to that. I really don't. I'm not trying to duck the question. I think, again, if you look at the success of the Indian diaspora outside of China, outside of India, you see something about what would be possible in India if the licensing Raj, that is, if the Indian government became less pervasive and the will of the Indian people began to express itself. Whether or not that will occur or not is an entirely different question, and it's one that's above my pay grade.
I've heard India described as a country with great potential because it's a democracy, but the problem is it's a democracy.
Well, H.L. Mencken famously said that investments are best understood as advanced auctions of stolen property. And often elite interests are the high bid in those auctions. And so obviously democracies can be inefficient. On the other hand, Winston Churchill said that democracies are the worst form of government in the world, except all of the others. So I guess you just need to deal with the devil.
What are the best and worst mining jurisdictions in North America?
The best mining jurisdictions in the world, in North America, probably are Saskatchewan, Quebec, New Brunswick, Alaska, and Nevada. The worst mining jurisdiction in the world, I suspect, is California. Maybe that's just because I have the most experience with it. I would suspect that the most overrated mining jurisdiction in North America is British Columbia, which is perceived as being very low risk, but I think politically is very high risk.
Are you bullish on the metals used for electric vehicle batteries?
Yes, but not so much because of batteries and more because of electrification. I'm attracted to the copper markets and the nickel markets, assuming that we don't have a broad-based economic slowdown worldwide, not so much because of batteries or electric vehicles, but more because of electrification and urbanization worldwide. I certainly believe that distributed power is going to be an important part of the future, distributed power being a fancy name for batteries. But I think what you'll learn is that the so-called lithium-ion battery is really more a nickel-copper battery than a lithium battery. And I suspect that the minor components of the batteries will prove, as they move up in price, to be much less rare than we think. The outlier, I think, is cobalt, which has tremendous utility, but also is constrained in terms of security of supply. What matters in cobalt would seem to be Congo and to a lesser degree Russia. And Congo appears to be unstable, but I think is actually more unstable than it appears. So to the extent that you were actually able to discover even a Tier 2 cobalt discovery outside of Congo, I think that the market might reward you dramatically. Unfortunately, most of the cobalt discoveries in the world outside of Congo are Tier 3. That is really, really, really marginal. So to play the cobalt game, you need to be willing to take the Congolese political risk, which is really problematic.
Would you buy an electric vehicle?
Yes, of course. Function of price and utility. Electric vehicles are subsidized, meaning that the taxpayer and the ratepayer pays me to drive, as opposed to with internal combustion engines. And while that's probably immoral, it's extremely pleasant. If my driving habits were more long-haul oriented, I would be less inclined to own an electric vehicle. But I'm attracted to the fact that electric vehicles, like the engine, has 3 moving parts, where an internal combustion engine has a couple thousand moving parts. If your mechanical skills are like mine, where you're challenged beyond a toggle switch, the fact that they are so simple compared to regular vehicles, and also the fact that both taxpayers and electricity consumers subsidize me is attractive, albeit maybe immoral.
Harbour Air of Vancouver, a short-haul coastal airline, plans to turn some of its aircraft into electric vehicles. Is that a wave of the future, using electricity to power short-haul flights?
I'm not good enough at engineering to answer that question. I think Harbour Air will begin to answer it. I can tell you that as a consumer, the fact that there are more people trying to figure out more ways to increase my utility and satisfaction as a flyer is a very good thing, so I certainly hope that they succeed. But I'm not a smart enough engineer to tell you whether they will or not.
We'll have more with Rick Reaugh right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMY.V, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. We're speaking with Rick Reaugh. Rick, is the oil market looking stronger?
I think the oil market is close to imbalance. What we've learned from the International Energy Agency is that the fully loaded cost to produce a barrel of oil worldwide is about $60. When I say fully loaded, I don't mean the lifting cost. I mean, if you include the cost of capital and if you include prior year write-downs. So any time that the oil price is appreciably below $60 US, you can expect the oil price to firm. Any time that the price is substantially in excess of $60 US, you can expect the oil price to weaken. It's important to note that the cost of capital prominently includes the interest rate. And that $60 number is partially a function of very low U.S. interest rates. Were U.S. interest rates to rise, the cost of producing a barrel of oil would rise, and presumably demand might fall as a consequence of capital shortages in other parts of the industry. So that $60 number and the oil market itself is partially interest rate sensitive. What I think your viewers might be interested in are Canadian oil and gas share markets, which are quite depressed. I make a pretty good case, I think, for adding Canadian oil and gas equities to a portfolio. I have certainly done so myself. Traditionally, Canada has been one of the most competitive oil markets in the world, with good energy regulation, good energy capital markets, and importantly, wonderful intellectual capital. Many of the problems that have confronted the Canadian energy industry have been, in Canadian hockey parlance, own goals. The idea that you had an anti-energy government in Alberta would have been farcical had it not been so dangerous. The Alberta voters, of course, thanked and excused the Notley government, which is a great step in the right direction. At a federal level, there have also been political impediments to the Canadian energy industry, despite the fact that the Canadian energy industry funds the Canadian government and equalization. The most recent polls I've read say that there is a 60% probability that Mr. Trudeau will be allowed to return to teaching drama after October. And should you have a change of government in Ottawa that became more energy-friendly at the same time that you had an energy-friendly government in Alberta, my suspicion is that there is a lot of upside in the Canadian oil stocks. I'm not saying for sure that this is going to occur, but I think it's a good speculative bet that it might.
Is the Fed likely to lower rates this year?
I suspect that they will lower rates. Again, I'm not an economist. I can't tell you for sure that they will. But I suspect that they might, and that would be very, very bullish.
Your thoughts
for very bullish, for things like precious metals and natural resources.
Your thoughts on Bitcoin?
I don't have any. I think it's an interesting speculation. I don't see it right now as much beyond a speculative vehicle, but I think the volatility in the price mitigates against the utility. The utility would be as a medium of exchange that wasn't subject to government control. But people are afraid to buy in it, and people are afraid to sell to it because they don't realize, or they're unable to realize as a consequence of volatility, the value that they're getting for the goods bought or sold. So ironically, the speculative appeal detracts from the utilitarian appeal. I'm much more attracted to the implications associated with blockchain and distributed ledger technology in other applications. Sprott itself has made now 5 different investments in blockchain or distributed ledger enabled gold transactions. So while I'm very attracted to using blockchain technology to enable gold to regain its status as real money, I'm less confident in the ability of cryptocurrencies to become money. I hope they do. I'm a consumer of currencies. So I hope a whole bunch of governments and a whole bunch of private parties, including, the Googles and the Facebooks of the world, compete with each other to launch currencies that serve me as a consumer. But with specific regards to Bitcoin, I can't help but note that the volatility both up and down, which, while it appeals to trading desks and speculators, limits its utility as a medium of exchange.
Do you think cryptocurrencies are going to be a fact of life in the near future?
I do. And I think that's great, simply because the distributed ledger technology is, so appropriate.
Is California in economic decline?
No. Despite the best efforts of our elected officials, who are really, truly morons, the truth is that individual accomplishments in California keep the place afloat in the face of collective stupidity. California is still a place where 6 pimply-faced geniuses can commandeer a garage and out pops Google or out pops Facebook. California has one of the most steeply, quote, progressive tax regimes in the world. 1% of taxpayers provides almost 50% of income and capital gains taxation in California, which is normally a recipe for failure. But the truth is that California has such distinct cultural advantages in technology that the geniuses seem to, at least for the time being, tolerate being milk cows for the rest of the state. If you had a turn down in technology in California, you would obliterate the state government in California. But right now, California is in effect a cow that feeds in Silicon Valley, and Silicon Valley is generating an awful lot of food.
Have you ever thought of going into politics?
If elected, I would demand an immediate recount.
If you were going to give graduating students some advice about life, what would that advice be?
Be patient and invest in yourself. What I have found is that shortcuts almost never work. That the long, steady, patient road to attaining whatever goals you have is the one that works. And invest in yourself, invest in your education, invest in your attitudes, and invest in your reputation. Never do anything for short-term gain that will impede your reputation in the longer term.
How can people find out more about the Sprott Symposium coming up at the end of July in Vancouver?
The best possible way, I'm giving people every incentive I can, if you're a natural resource investor, is to email me personally, myself. I'm available at rrule, that's R-R-U-L-E, at sprottglobal.com. As an additional incentive, if in the email, in the text of the email, not as an attachment, in the text of the email, you include the natural resource stocks in your portfolio, both symbol and name, I will rank those stocks on a 1-by-10 basis and send them back to you with, of course, information about the Sprott Vancouver Natural Resources Investment Symposium.
Rick, thank you so much for being on This Week in Money.
I always enjoy it. Thank you very much, and I look forward to seeing you at our conference.
My guest has been Rick Reaugh, President and CEO of Sprott USA Holdings. He was speaking to us from Vancouver. Coming up, Allan Mark Angell, next on This Week in Money.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain Royalty Corp. is a Canadian-based mineral exploration project generator. The company currently holds multiple property interests in Ontario with joint venture partners and is seeking further joint venture partners for other drill-ready properties in our portfolio. For more information, please visit our website at rmroyalty.com or call me at 604-922-2030.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. My guest is Allan Mark Angell. He's one of the top realtors in Canada. He's sold more than 4,000 properties. He's located in West Vancouver, BC, and online at the angellgroup.com. That's spelled A-N-G-E-L-L group.com. Allan, welcome back to This Week in Money.
I'm extremely glad to be here.
Allan, can you first of all maybe explain why you've been so successful and what you're up to now?
Well, to be honest with you, probably because I started selling in the 70s, and I started so badly I couldn't say my name, so I developed a system of stats. The board does the stats in a certain way, and then I looked at them. I said, well, they're not doing the way that really we need to have them done. So I started my own system of stats. So instead of trying to tell people, I showed them facts and figures. This is what is going on. And then by 8 years, I was the number one realtor in Canada at that time. But I could attribute to I guess you have to be liked, but also, you have to show people the facts. And I'm still doing that. And the board hasn't changed their way of doing the facts. The board's stats show a trend in the market, but they're not exact enough to give you the information that you need. For example, on July 1st, the board will announce how many sales came out in June. Well, everybody knows that if you're buying a house nowadays, it's a subject clause if they used to be a week, now they're 2 weeks. So that means from about June 18th to the end of June, all the deals that happen are not firm until July. They're June deals, but they're not firm until July. So when the board stats come out, they don't have all the real June stats. And what they do is count the deals that were handed in. They could have been done in February, subject to sale or something, but handed in June. So with the market being as poor as it is, basically the worst market of all time, every sale can change the market. If a $10 million house comes through selling at 7, it changes all the high-end market. So you need to have the sales exactly that is happening. Because sometimes the board, like I know there was a month in December, a couple of Decembers ago, the average December is 33 sales. They announced 31. The actual number was only 17. So That's why the board stats, 99.5% of the realtors use them because they assume they're true in fact, and at the end of the year they come close. But I don't, and so I can tell people or show people this is what the market is doing. And that's the biggest flaw in our real estate market as it is. The realtors don't really know the exact sales. They know how bad it is, but they can't show the people this is what's actually happening.
Do real estate boards like to, I like to say, mix and match numbers? If sales are slow, maybe not report those numbers and then pile them into the next month?
Well, they do report all the sales, but the way, like, if I want the sales for June, I have to keep checking every day if there's another, say a sale for May. In fact, I did my Vancouver West sales yesterday, and I sometimes go back and check. Let's see, 2018. It says I had 700 sales, but when I went on the computer, they now had 701. So I had to go back, and I found that extra sale in October. So that was just done last week. So that October sale was obviously a long subject deal or something else. But the realtors don't do that, so they just use the sales that were reported and use them. But as I said, this market, you need to know every deal that goes through. I analyze every single sale because every sale changes what the market is doing.
So how are sales doing right now?
The sales are terrible. Last year was the worst year. I mean, I've been real since the 70s. There were fewer sales in 2018 over every other year. And 2019 is worse. So basically, and the year before, 2017 was the third worst year. Last year was the worst year. And 2019 will probably end up worse than for next year.
Do you have sales numbers for the first half of this year, and how does the first half of this year compare to previous years?
Well, it's interesting because I did a little more, I always work West Side, West Vancouver, downtown, things like that. So because I know a lot of people that listen probably live in other areas, Richmond, Vancouver, East, Burnaby, all the areas. So I decided to spend a day going through all the areas, and I said, okay, let's see if all the areas are the same. I do the area of Vancouver as well. So very interesting. The area that I work in is West Van. Our best year ever is 1201. Average is 744. Last year we had 322. Now, as of this time of the year, our sales are up 16% over last year. So that's a good sign for West Van. Now, it's still going to be our second worst year, but ours are up 16%. Ours is the only area that is up. North Vancouver, this year over last year, 8% down. Vancouver West, 4% down. Richmond, 22% less than last year. Vancouver East, now, I never looked at Vancouver East in my life because I'd never sold a house there. Now I'm selling sold a place in Burnaby, downtown North Vancouver. In fact, I was out showing houses in Vancouver Island. That's where you can go to the Sunshine Coast. Now we have to expand our territory because we're not doing enough sale. But Vancouver East, for example, I went back to the 9th for the sales. Their largest year was 4,078 sales. Last year they had 921. 921. The average is 2147. So that they were down, and this year they're 23% less than last year. So they're down 23% in total sales. Now, I'm talking sales. I'm not talking apartments. I'm only talking houses. Apartments is a whole. I need another hour to go through apartments. But so that Vancouver East is down 23%. Burnaby, North, South, and East combined are down 19% over last year. Their highest year ever was 2254. Last year they had 565, and they're going to be lower. Coquitlam, Port Coquitlam, Port Moody is down 18%. Maple Ridge, 29% over last year. Greater Vancouver as a whole, 18% down. So very, very interesting. Every area except West Van is down. And what else this chart shows me, the government says, we're affecting the rich. My stats show it's completely the opposite. Because if you look at West Vancouver's up 60%, Vancouver's only down 4%. All areas are down a lot more. So all this garbage about the effect being the rich and all, that they're being affected the most, it's not true. It's the average Joe medium house, they're dropping as just as a high percentage as the high end stuff, and that's scary. So what the government has told us, well, look, we're just doing this to get the prices down, but you can't get a mortgage at the bank. It's almost impossible with the new stress test and all the rest. So it's the average areas that have been affected more than the high end.
What does that do to the overall market and confidence in real estate?
Well, it scares you out of death, but this happens, every 7-8 years you have an adjustment of some kind. 2008 was a terrible year, you know what I mean? That was like, and so, but it comes back. It always comes back. It always has. And so, I mean, it's just, we just have to wait. We need a change in government, because if the NDP stay in power, we're going to have a real problem with the market's going to, be down for a much longer time. And most of our money is invested in our house. Now it's dropping at a 25 to 33% down over what it was. People have lost a lot of money. I feel sorry for all the people that bought a house in 2015, 16, 25% down. Their cash is gone. The equity is gone. It's all gone. And they're going to lose some more.
What about all these government actions, 20% foreign buyer tax, an empty home tax, speculation tax, school tax? Is this hurting the average person?
Absolutely, because the high end houses that we talk, the high end market. If you're over $7 million, I combine Vancouver West and West Van. We think of that as being the high end homes. If you've got a house over now in 216, you bought a lot here in West Van, you paid $4,000 and up for a new home. So every new home came on as $7 million and up. So if you look at $7 million and up in Vancouver West and West Van, you got 190 of them for sale. 190. We're only selling 2.5 a month. So basically, if I list my $7 million house right now, I've got a 1.3% chance that it will sell this month. So the high-end people are not dropping the price to such a great deal, such a large amount that will sell. They're not doing that. They're going to sit and wait. But the average person who changes jobs or whatever thing has to move around, that's what all the sales. The high-end market's only about 8% of the whole market, so 92% are everyone else. And they're being affected because more of them are, so many more, they're moving, changing jobs or getting divorced or whatever the reason, lost their job. They're the ones that are being hurt more than the high end, because the high end doesn't seem to care that much. So there's a few that have to sell. They'll just wait till the market turns around.
Why are West Vancouver waterfront properties not selling, or have they started to sell again?
Well, no, if I look at West Vancouver, because there's more oceanfronts here than anyplace else, of course. I consider from Ambleside to Horseshoe Bay, and then from Horseshoe Bay to Lions Bay. If you take my charts since the 80s, the average sale for close in, as I call Horseshoe Bay to Ambleside, is 18 a year. You go to Lions Bay, that comes up to 23. So 18 is the average, or 23. This year, we've sold one between Horseshoe Bay and Lions Bay, and we just had our first sale this past week in Ambleside to Horseshoe Bay area. Now, there's an example. That sale proves a lot. That our oceanfronts are overpriced. When you're dealing with an oceanfront client, they think they know more than the realtor does. In most cases, they probably know as much. Because the realtors don't spend enough time on the staff that know and can show people this is what they're doing. When I go in and show, listen, before last week, there's 35 waterfronts for sale. We didn't have a sale between Horseshoe Bay and Ambleside. That shows you right there that you have to price it accordingly. The trouble with the realtors, we want to get their house for sale. If you're too low, they give it to someone else. I did one not too long ago. I told it was in the fourth. They listed with somebody else in the seventh. Not a chance on earth to sell. But they don't want to, there's a line in the movies, you can't handle the truth. That's it. Either the realtors are not prepared, or in most cases they're afraid to tell the people the truth because they'll give it to someone else. The buyers have changed. We don't have the Chinese buyers for the ocean fronts. Persian buyers do not really buy a lot of ocean fronts. They buy a lot of waterfront apartments, but not houses. So the two sales, we've been both Caucasian buyers. But as I said, there's the buyers, there's no longer the high-end Persians or Chinese. And us poor Caucasians, in most cases, haven't got the funds to buy these expensive houses.
We'll have more with Allan Mark Angell when This Week in Money returns.
AMY.V Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, AMY.V's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at AMYVresources.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. We're speaking with Allan Mark Angell. Allan, if a foreign buyer wants to buy a $5 million home in West Vancouver, how many taxes would they have to pay, and what would that $5 million home actually cost them?
Well, it can be, there's a whole bunch of taxes. Some apply to them, some don't. Whether they're going to use it all the time or have to rent it out. But it's going to be at least $1,200,000 to $1,350,000 in taxes. So basically, if you're buying a house today for $5 million, you're paying $6.2 to $6.3 to buy it. And then the market's still adjusting, so probably in a matter of months, that house is down to 4.5. So you've now lost $1.8 million. So there's no foreign buyers there. There's no foreign buyers. We have still a lot of Chinese buyers, not as many as we had before, but they already have homes here. They're already established here. So foreign buyers are gone. So the government has accomplished that.
Is it because of all these extra costs?
Oh yeah, I mean it's insane. Why would you pay $1 million plus in taxes, more than the house is worth on a falling market? Mm-hmm. They're going to go somewhere else and buy.
Are empty home taxes causing foreign buyers to put their properties in the Vancouver area up for sale?
No, they rent them. Most of the foreign buyers are Chinese. Now, the Chinese don't like to take losses. So I'll give you a couple of houses I sold, remember, in 2017. One I sold for $5 in the fives, the mid fives. Now it's probably worth $4.2, but it came on, somebody else put on at $5.8. There was one I sold in the properties for $4.1, and the strangest thing is a client of mine went in there and paid rent for it, and it is sold for $4,088,000. He says, I'm paying rent. If I was to buy this house, what would it be worth today? And I says, it's probably worth $3.2. He says, but I probably might think of doing that. Lo and behold, 2 weeks later, it came on with a Chinese builder because the Chinese owned at $4,888. He bought it for $4.1. Now he put it on for $1.6 million overpriced. So what they do, they rent them out. They don't want to sell for losses. They hate taking losses. Chinese, their life is real estate investments. Ours as Canadians, who live in the home and enjoy it. So they will rent the house out. Very few will take a loss unless something disastrous has happened.
We're hearing that Canada is likely heading for a recession or has already started a recession. What happens to the prices and sales of high-end homes in a recession, especially following a real estate bubble?
Well, they're all affected. But as I said, the only high-end homes that are really going to be affected, maybe if you were building a house, you built houses and now you have to sell it. So they will be affected. But if you're a high-end home and you bought it for your family, that you will simply, the interest rates are still low. Not like in 1981 when the rates were 18-20%. People had to sell at their high-end house because they're dropping at that rate. So the high-end market is incidental. It's the average person's home that is being affected the most. And it isn't right. It's not fair. They're the people who need this house for their retirement.
Have these government actions actually hurt the average Canadian, and should they be removed?
Oh, I am praying. Yes, they have hurt every average Canadian so much because they're affected more than the high end, because the high end already has lots of money. They have lots of money. They'll wait till it's sell the private. The average Canadian has to move for, maybe they need a larger house, smaller house, whatever it is. They're being affected more. They're being so that this talk about only the high end. It's absolutely. Look at tax assessment. If you're in a high end house, 60% of the high end houses are selling below tax assessment. 60%. So still 40% are selling above tax assessment. If you're in a middle range to low, 82% are selling below tax assessment. 82%. So that's the normal average person, middle class Canadian. 82 less than your house is assessed at. So they're being affected, but by far the most.
Do you expect high-end inventory to increase through the end of 2019?
No, I checked from January 1st to now. I mean, it has increased. Naturally, it will because springtime's always a stronger market. But the rest of the market increases so much more, because there's so many more houses in that range. But it's going to be there'll be more increase in the middle class houses than there are in the high end houses.
Are banks continuing to be conservative in their mortgage lending?
Yes, it's terrible. All the new restrictions at the bank. My last two deals I couldn't get over. Two of my clients were turned down, and they had so many $8-9 million equity. He wanted $1 million loan, but because he's retired, they did give it to him. He's tried to sell one of his houses, so it would have been a matter of months. It's absolutely insane what they're doing. And the problem with the banks is that because they don't have a real estate expert in there, or they ask the board. Now the board finally realizes the market's dropped 33% or something. They said, but that's 3 years ago. It dropped 3 years ago. The bank should have known that in 2016. With June of 2016 was when the market ended. You look at my stats, it proves explicit. That's when the market ended. So the board was still talking in August 17 how great the market is. The boards are not real estate guys. They're just administrative guys putting out things. And so the bank looks at the board. The new superintendent of real estate looks at what the board says. But they're the last people you should look at. You should talk to the top realtors who actually know what they're doing on the stats. So the board put in the stress test, but it was too late. They should have done that in 2016, not last year, because they were so it's too late. All these people that put 25% probably would have saved that because they might not have qualified to buy a house. So as the same old fact, because they don't know the real market conditions, they screw up.
Will banks need to be more liberal in their mortgage lending for the high-end real estate market to put in a bottom?
No, I mean, the high-end market, maybe a high-end house I sold, and I've sold houses up to $30 million. They're either, if they're going, most of them, if they come from somewhere else, they want a mortgage. They're looking at 50% down. So they're safe because they're all putting half it down. You buy $8 million, they get a $4 million mortgage to establish their credit in Canada. So no, it's not going to change. It's not going to change them. Where it hurts is a normal guy trying to buy his first house or his second house or something like that.
As China's economy continues to be in trouble, is this causing any foreign owners from China to have to sell their high-end properties here?
Well, very few. I've been actually amazed. There's so few sales, as I said, when you're only selling 190 houses in West Van and Vancouver. We're only selling 2.5 a month. So obviously they're not affected, or they would be pricing their house a lot less for more sales.
Foreign buyers that bought near the top of the high-end market in 2016 are looking at significant losses if they sell now. What are those foreign buyers likely to do? Wait.
Because I talked to all of them, and they realize all my high-end clients with expensive houses, that we sit down, we develop a strategy. I tell people, my largest client I've sold 60-some houses to, I said, this is what I would buy, I would hold on. I tell them the time to sell because I do all my stats. That's where your realtor is most important. And the average person thinks that they know as much as the real estate does. They don't want to hear the truth. But if your real estate's really strong, and I'll be honest with you, Jim, there's only a few guys that really do the stats. A lot of my staff does the stats probably because I've taught them that, but probably there's just a handful that really can explicitly show this is what the market is doing today, and here's the proof.
With the political troubles in Hong Kong, are any people there expressing interest in buying in Vancouver despite the foreign buyers tax?
No, it's harder to get your funds out. It's so much harder to get, and I don't blame China. I mean, I wouldn't if I was Canada and all the wealthy people were running away. I would do my best to stop it too. I don't really see foreign buyers that much.
We'll have more with Allan Mark Angell when This Week in Money returns.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp, MGI and the TSX Venture Exchange. A 2015 drill program on the LH property intersected several high-grade gold intersections, including 11 meters of 20.66 grams per ton gold. Additional drill targets on the LH property have been identified by a 2018 drone airborne magnetic survey to further evaluate a pyrrhotite-enriched gold-bearing system. Please visit our website at magnumgoldcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back. We're speaking with Allan Mark Angell. Allan, BC's Attorney General David Eby has launched a public inquiry into money laundering. Is the main focus of this inquiry likely to be high-end real estate in West Vancouver?
You know, I've been selling for a long time. I have never had a deal where I even suspected money laundering was involved in it. Never. Because the clients that, even after I've done the deal, I've seen the clients, they have normal jobs or whatever. And I've never seen any indication at all. Now, maybe in the casinos there were money laundering. Maybe there is some in houses, but honest to goodness, it's so few that it really has no effect on the market. Now, I do have trouble with this money laundering because let's face it, it's a terrible thing. It's against the law. But the truth of the matter is if there was money laundering in the casinos and that, we had more houses sold, more cars sold, more jewelry, clothing, everything. The economy was so much stronger. Once you close it down, everything suffers. So it's a double-edged sword. You don't want it, but if you have it, the economy is stronger here.
Is that why the BC Liberals shut down the money laundering arm of the police that looked after casinos? They wanted that extra cash?
Well, listen, in my feeling, government really bothers me. I've been saying in business, every business, real estate, doctor, lawyer, athlete, there's 2 or 3 guys who are at the top, there's a few good ones, and then there's all the rest. Now, if you're a really successful lawyer or something like that, you don't have time to go into the government. If you're at the top of your top 3, you don't have the time. So our government's made up of people that are all part of all the rest. Now, they make mistakes because they make decisions on real estate, they make decisions on lawyers, but they're not lawyers or realtors in that business, yet they think they know more about that business than the people do with their own. Our business has a real estate council, and I think it's 12 or 14 guys, only 2 are realtors in there. Well, the other people aren't realtors. Well, what could they possibly know? How could they possibly improve our business when they don't know anything about it? It's like putting me, the big lawyer, lawyers have a board of disciplinary action. Let's put me on that. I know nothing about the business. I'm not qualified to do that. I shouldn't be on there, but that's the problem. They should make rules with the people in the business, not what they think they should do. It's political. We're doing this to get votes. You see it in the States right now. The politics in the States is insane. They're doing all these changes. They don't believe in them, but doing it all to get votes. Our governments are all the same here. They want to stay in power and get their pension. So let's give the people what they think they want. The NDP thought they're going to make so much money to do all these great programs. So yes, the programs are great. But unfortunately, with the lack of house sales because of all the taxes, they've crushed the market completely. they're not going to make as much money, anywhere near as much money this year as if they had put the taxes in. So they made huge mistakes. They're not going to have the money. Look at this, the empty house tax. I mean, I just sold a nice apartment downtown, brand new, all new furniture in it. They live in Kelowna. They don't know how much time they're going to pay, how much time they're going to be here. So now they have to rent the place out. Rent it out. Do you want to rent a place you just bought? It's all new and new for it to rent out to strangers. If you don't, you're going to have to pay this tax. Brand new homes. I just sold a new home, was on the market for 2 years. Came on at 6, sold it for 3.3. 2 years to sell it. He got called from the government saying he's got to pay the empty home tax. That's insane. So that means he would have to rent out a brand new home so he wouldn't have to pay it. The government's already decreased it from 6 million down to 3.3. Now they want to make you rent it. So you're going to lose another $500,000 because the house is no longer new. These policies are insane.
What have these policies done to recreational property in BC?
Well, as I said, in certain areas you're going to have to rent them out or pay the taxes. So it affects them all. You don't want to buy a recreational property now because most people don't. I mean, I live in BC. I'm bored. You know, if you're born here, lived here all your life, you should be able to buy a recreational property that is yours. You don't have to put strangers in it. It affects the value of those properties immensely. I don't want to buy something that I have to rent my place out. It's not fair. It isn't right. The government's lost its mind.
By focusing on high-end properties at increasing prices, did foreign buying pull up the prices for the rest of the Vancouver market?
Yes. When the foreign buyers came in, you know, you must understand they use local realtors. Most realtors just want to sell you the house no matter what, no matter the cost. So many, like in our area, for example, one of the reasons with West Vancouver has suffered so much is that when I was at the top in the 80s and 90s, we didn't have very many realtors coming from over town. I could do over 100 sales in a year because we didn't have the people from other outside areas. Maybe we had 5 or 6. If you take last year in West Vancouver, we had 322 sales. The previous lowest was 456, so that was by far the worst. But of the 322, 51% of them came from realtors outside the area. So that only left 160 sales for West Vancouver realtors, 867 of them. So yes, but they did affect the prices. They drove up the prices. They overpaid because they didn't use local realtors who would tell them what the place was worth, or they didn't. Most realtors don't do the stats. Probably they look at the board's graph and say it's doing this, it's going up, it's fine. They can't do it. So I dealt with a client the other day. I've had her house for 1.5 years, and she said the reason I listed with Allan, I continue to list with Allan Angell, is simply because when I first went out, I wanted to buy an apartment. He wouldn't let me do it. He said, "No, we're not buying until you get your home sold." Because so many people bought without the proper instructions from the builder, because they probably didn't know what the market was about to do. And so she thanked me. But it cost her $2 million. So that's what you have to do. But I'm just as dumb as everybody else because I knew this at 216 the market was going to die, and I had 2 offers on my house. At 217, I know I should take it, but I love my house and I turned them down. Now I'm thinking, God, even I didn't think it was going to get as bad as it is. You know, you don't know all these taxes are going to keep coming in. They're going to change and make it worse. You don't know what the government is going to do, so you screw up. So yes, when they bought the high end, they increased the prices so much, but now they're going down. But it's the middle of the road that are having to sell more than the high end, so they're being affected the most.
Are foreclosures increasing on high-end homes?
They're increasing in all the houses. The high-end houses that are being affected are the contractors who bought the lots in 2016. They paid $4 million to $4 or $5 for a new lot in our area, and now those lots are worth $3 at the most. So they've lost $1.5 million on that construction. So they're the ones that have to sell because they might have 3 or 4 houses on the go. They're being affected. So the high end that is affected is the new construction. The poor guys that build all these houses. And I mean, I can't tell you how many times I sold lots, and I said to myself, this guy should not be buying this. I had 2 deals that went on 6 months closing. Now, we had $400,000 or $500,000 deposit. Those people should have walked away from their deposit because I knew that house is going to drop a lot more, and it certainly has. It's come down $2 million to $2.5 million. They were better to walk away from $400,000 or $500,000, but that's why I didn't sell any of those lots because I knew that this was not going to happen. Unless you were buying it to live in it yourself for 10 to 15 years, you didn't care. But I did not have one builder that I said, you should buy this, because I knew down deep he would lose his shirt. But if you bought it for 4.5 and you're going to live there for 10 to 15 years, you won't care.
What do you see ahead for real estate through 2020?
Well, believe it or not, even though I sound as negative as I do, everybody says, hey, Angell is such a negative. I'm not. My glass is always half full. I'm a very positive. I see a lot of positive changes in West Vancouver, and I was right. I said this, I think, early in the year. I said, it looks like the attitudes changed. People are now realizing there are some good buys out there, real good buys out there. It's a good time to buy those because you can snap them up because you're never going to time the market at the bottom. So yes, the market's going to be awful. It's not going to change it's going to bottom out in a matter of months, in my opinion, and stay flat till the NDP are gone, then another year after that. So you might have 2 to 3 years of relatively flat, but it's only going to drop a matter of months more. Then you'll get more sales because once the buyers feel that, okay, the market's at a bottom, they'll go and buy. So I am a little optimistic, even though the whole lower mainland is falling down. But I believe that because the realtors didn't know the truth about the market, or they didn't want to tell the people the truth about the market, how bad it actually was.
If people price their property to the market today, are they likely to get a sale?
Yes, but to achieve the sale, it's not just putting it at what it's worth. What the realtors don't do, and this is another of my sore points, I break down every price range. If I look at how many houses are for sale between $4 and $5 million in West Vancouver, how many between 3 and 4, every realtor should do that for every one of the houses they're appraising. They get to, but they don't. They just tell the people the market's soft. So I did one the other day. I said, okay, you're in the 4s. There's 64 for sale between 4 and 5, and we've sold 9. So when you look at that in 6 months, that's only one. So really, that tells you how the market is, but it also tells you if you got 64, like in 122 in West Vancouver, over $7 million, and so that's all you have, and you're going to sell 2 of these a month. So you have to price yours not what it's worth, but what it'll take to sell. You look at, okay, you've got 80 to choose from. How do I make mine one of the 2 or 3 or 4 that are going to sell? In the $5 million, they're doing 5 sales a month, and you got 80 something. So you have to break down the price range and see, okay, if we're only doing 4 or 5 sales a month, how do I get mine sold? I price it accordingly to make it in one of the best 5 price rates. So it's not just what you think it's worth. I may think it's worth 4 or 5, but I may have to tell them, listen, it's worth 4 or 5, but really, if you get $4 million, 2 for it, I would jump at it and take it for sure. So it's got to be priced according to the competition you have in the area.
With the stats you keep, are you able to help your clients by justifying their case for presenting lower offers to purchase properties?
Absolutely. That's what the stats are for. They're for the buyers. You can present. The problem you have, I have all my stats, so I have them down exactly, but I know the realtor that may have the house for sale trying to sell. They'll know, as I say, they'll know the market's soft, but they will not know how many sales that are happening in that price range. 99%. I had one the other day. I appraised an apartment. I told him 2.2, and this other realtor went in and told him 2.9. He didn't have a clue. He's one of the top 5 realtors here. That after he got it, we talked and he realized, well, the one down below, same speed as his, what wasn't fixed up was 1.6 it sold for. So you need to do your homework, and the realtors, even if they're successful, they go on their name and something else. Today it's more important. Stats are the most important thing you could do. It helps people determine. There was an article, a guy from over town, one of the big real estate companies, put out just a week and a half ago. And it said real estate in Vancouver West in May was up 44% over the month of April. Well, didn't have a clue. We phoned and said, how'd you get this? He said, well, I got it off the board. So he doesn't know. No, he isn't a salesman. He's in he's in a different position in the office. But he's on his feet. He puts out that. So all of a sudden, I'm now a homeowner, and I'm saying, okay, look, I just saw this article in the Globe and Mail. Vancouver just jumped 44% in Vancouver West. Well, I'm going to turn down the offer on the house. That article just cost a guy a lot of money. And that's because how the stats are done, realtors should take a special course and say, this is the proper way to do them. Don't believe what the board puts out. It ends up almost the same by the end of the year, but we need specific sales today, how it's happening.
Allan, how can people get more information about your operation?
Well, I'm at Angell Hasman. Malcolm Hasman is my partner. We probably own the most successful high-end company, not probably the most successful high-end company in the Lower Mainland. We're in West Vancouver. Probably my email address, allanmarkangell@gmail.com. Allan, ALLAN, MARKANGELL @gmail.com. Angell has two L's in Allan. That's an email, or my phone number is very easy. I'm a chatty Cathy type. I love real estate's the life. That's all I do is talk. If you need some information about what's going on here, don't hesitate to call me. I love to talk. That's all I got to do. 778-888-7474. 778-888-7474. As I said, you need to hear the truth.
Allan, thank you so much for chatting with us.
Okay, Jim. I thank you again. I'll hear from you soon, I hope. Okay, take care.
Our guest has been realtor Allan Mark Angell. He was speaking to us from West Vancouver, British Columbia. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Rick Reaugh, Allan Mark Angell, and thank you for listening. If you have any questions for our guests or for the show, you can send them to info@housestreet.com. I'm Jim Goddard. Have a great Canada Day weekend. Now, coming up, a company showcase update from Larry Reaugh, the CEO and president of American Manganese. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at talkdigitalnetwork.com. This Week in Money is a production of House Street Media Incorporated. Executive producer is Tom Allan. Welcome to Company Showcase, an advertising feature on HouseStreet.com.
I'm Jim Goddard. I'm speaking with Larry Reaugh, CEO and president of American Manganese. Happy Canada Day, Larry, and welcome back to the show.
Well, a happy Canada Day to you, Jim. It's always great to be on the show.
We have some new news about the pilot project. What's happening with the plant?
Well, we've finally got the up to the stage 3 and 4, and we've produced a nice big cake there that we sent out with our press release, and we're really happy with that. We're waiting for assays. We know it's high purity, but we don't have an exact number just yet. And as soon as we do have that, we'll include that in one of the next releases. But, that's another big step for the company. I mean, as you can see in the picture there was substantial material that was got out of 35 milliliters of water, or liters of water. And, that's excellent. But there's a couple other things I want to talk about. And that were in the release, and that's that we have these 31 non-disclosure agreements with various parts of the lithium-ion battery scheme, from recyclers to EV battery manufacturers and, corporations that are trying to break into it, that type of thing. So that's always good, and and that is only increasing. And that results, of course, in the company having to divert money and time to testing some of these companies' material. So we'll be doing a lot of that in the future. And, got to get them. They want their material tested. They don't want a sample of our material. They want to, see what we can get back and how we can turn their sample around, because we should be able to turn it around to battery ready in a high purity form. So that's the aspect of the NDAs that we have out there. Now, there's other things I've been reading about in the financial news or in the actual news flow of EV cars, and as you know, they've been reducing the amount of cobalt. Well, what does cobalt do for cars? Well, the biggest thing that it does, it offers stability in thermal runaways, reduces the thermal runaways in vehicles. And I'm looking at a company here out of China called NIO that has a 25% recall, and it's not small, I should say. It represents about 2,800 cars being recalled because of some fires that they had. And that's not a small amount, and it's certainly expensive for these cars. That's almost 5,000 cars. So what does that tell me? Well, we figure that if they have a 811, which is 8 parts nickel, 1 part manganese, and 1 part cobalt. That's NMC 811. So what you have here is you have a big reduction in the amount of cobalt that's in there. And, so this is one of the areas that we think they should be really checking and to make sure that it's not the lack of cobalt in their formulations that is causing some thermal runaways and some problems that could, bankrupt a company that's just starting out. So, that's my plug for cobalt today. Now, I keep talking about India being, we're getting more and more queries out of India, and I'm reading more and more articles on that they're really getting gung-ho on, producing EV cars, battery manufacturing, recycling, the whole ball of wax. And, so India is really moving into the center. It reminds me of what China was doing a few years ago. And I think that's going to have a big impact on the market. So, EV cars, in my estimation, has reached the point where it's here to stay. I'm not sure it's going to grow as rapidly as some of the predictions, but it's definitely going to grow at a rate that's going to create a lot of batteries that have reached the end of life, spent batteries, and that's going to call for recycling and handling the batteries in a safe manner that's good for the environment, and that's something that we offer. So that's that's basically another party entering the field with a very large population, I think 1.1 or 2 billion people. And, that's not small. That's a big audience, and it's certainly a area we'd like to be moving in. And so I just see things are really picking up for the battery industry. I know that I talked about gold last week. It's been down a couple of days now, and but that's as far as I'm concerned, it's a natural pullback. And what I'd like to point out is that here we are with a gold market screaming up and nothing happening on the venture except going down, and so that's not a good sign. But I think that our technology will overcome any kind of a market correction. It may be a good place to be if you're looking to put your money in a safe area. Because this is an expanding area that is growing rapidly.
Larry, where are you traded, and how can people get more information about American Manganese?
We're traded on the Toronto Venture Exchange under the symbol AMY. We're traded in the U.S. under the symbol AMYZF. And we're traded in Frankfurt under the symbol 2AM. You can always go to our website, which is AmericanManganeseInc.com, to get all the up-to-date information and news releases. You can actually phone the company at 778-574-4444, or you can send me an email at LREAUGH@AMYMN.com.
Larry, have a great long weekend.
Thanks, Jim, and you have one, and I wish everybody else a great long weekend.
I've been speaking with Larry Reaugh, CEO and President of American Manganese. I'm Jim Goddard. Our conversation took place on June 28th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated.